Hi my friend, it's great to see you again. I'm Ken from Crypto Trading KS. Let's run the numbers. Bitcoin currently down 1.21% to 64,029. Ethereum down 1.31% to 4660. My goal is to assist you to be more of a financial blessing to yourself and those you love, and also gain real wealth in the process. Crypto can create life-changing wealth, and that's fantastic, but also we look at our actual life trend. The trend towards real wealth includes inner and outer peace, happiness, kindness, strength and boundaries, fulfillment and meaning, purpose and fearlessness, empathy and love. It's all the special sauce that makes life truly worth living. One of the most important steps in the journey towards real wealth is to understand that you are worthy and completely unique. There will never ever be another one of you in this world. You deserve kindness, love, meaning, and every success in life. There are 4 stages that all investors and traders progress through to become consistently profitable and attain real wealth. Zone 3 is the patience and rule zone. This is where consistent profitability occurs. Zone 4 is the meaning zone. This signifies all the components of real wealth. Zone 1, the panic zone, and Zone 2, the blame zone, are the necessary steps to get to Zone 3 and Zone 4. In Zone 3, we look at probabilistic fearlessness. We trade the chart in front of us and make in advance probabilistic choices. We understand the price can go up, it can go down, it can go sideways, and we have strategies to deal with each of those eventualities. A piece of positive news comes from Michael Saylor. Surprise, surprise, Michael is very, very positive on Bitcoin. He basically says, Bitcoin is going up forever, and here's why. Because it has a capped supply, it's mathematically programmed that Bitcoin's maximum supply of 21 million Bitcoin can never be increased. He says every other asset that you can buy as an inflation hedge, like real estate, stocks, gold, or commodities, all of those things have a supply that's going to increase as the price goes up, but you can't increase the supply of Bitcoin. Good point, Michael. We are with you. Something really interesting in this article that I wanted to bring to your attention. Gold is not fixed. Bankers can print 100 ounces of paper gold for every real ounce of gold. And this is a really interesting thing. Michael uses the term rehypothecate. And what is that? That's a practice whereby banks and brokers, for their own purposes, use assets that have been posted as collateral by their clients and they loan them out again. We may ask, is this legal? Yeah, it is. If an asset is rehypothecated many times, it can send shockwaves through the market, leaving many without their original investment. This does happen to the precious metals. Hypothecation refers to an arrangement wherein a person borrows money from a bank by collateralizing an asset without transferring the title and possession. It's a pretty tricky area, but what Michael says is correct. Another piece of good news for Bitcoin and crypto is the Taproot upgrade. This particular article, how far will the much awaited Taproot upgrade take Bitcoin? Very good question. When we look through this particular article, this particular author says the soft fork is set to take off in just a few hours. That was on November the 13th. Like all things in our community, we fact check the news and we run the numbers. It's about 1 day, 10 hours away, but this can wobble around a bit. The basic gist of this particular news is that Jimmy Song, Bitcoin programmer and technical expert, said that it will take some time for the effects, the benefits of Taproot to take command in the market. But literally, what are those benefits? With the Taproot upgrade, Bitcoin's capability to compete with other blockchains like Ethereum and Polkadot may increase. Taproot makes Bitcoin transactions more secure, and more complex, but it will probably actually reduce transaction price a little as well. The upgrade would allow smart contracts to be built on Bitcoin. It can be a very, very interesting thing to watch over time. If Bitcoin can actually compete with Ethereum, that will be a very fascinating thing to watch. In other news, the SEC, the Securities Exchange Commission, disapproves, very disapproving, of VanEck's Bitcoin ETF. That's a spot ETF. You'll know that 2 futures ETFs were recently granted access. This would have been the first exchange-traded fund with a spot Bitcoin ETF focus. Basically, the SEC is saying it's no good and it's seeking to protect the American people. It's quite interesting that Canada has Bitcoin ETFs. Europe does as well. Even Australia does. All of them spot, not futures. But America has futures and not spot. There's quite a difference between futures ETFs and spot ETFs. In spot, you actually own the Bitcoin. They have to buy Bitcoin. In futures, it's a derivatives contract, so its value is derived from something else. That something else is price movement. In a recently published research report, they had some very interesting statistics. I'll just scroll down to this. 86% of those actually surveyed, nearly 9 out of 10 Americans, say that they have heard at least a little bit about cryptocurrency, and 24% heard quite a lot. Around 16% say they have invested in, traded, or used Bitcoin or Ethereum, and you can see many have not. I make note of this because we are really early in the adoption phase of Bitcoin and cryptocurrencies. Fidelity Investments also did some research. They found out that less than 1% of the population has an active Bitcoin address, and less than 3% of the population holds Bitcoin. That's really quite amazing. We're so early in the adoption cycle. As we're so early in the adoption cycle, there's a lot of volatility inherent in the market. I wanted to bring this particular article to your attention because I thought it was kind of cute. Bitcoin prices slashing while Taproot upgrade is on the horizon! Exclamation mark. When we look at this is very interesting use of language. The global market cap is ripping apart. Oh no, what's happened? Most of the tokens are drowning. Oh, very interesting use of the English language, including a dip of 2.5% in Bitcoin. My goodness, this has never been a larger percent. Of course, I'm really being sarcastic. Sorry about that. Couldn't resist. When we look at Bitcoin, we expect 20, 30, 40, even 50% reductions. When people look at conventional markets, a 1% reduction in something is a bit terrifying. At 2%, it's a crisis. 10%, oh no, run for the hills. 10% is every other day in crypto. That's what cryptos are built on, inherent volatility. You can see that volatility to the upside here when we look at Bitcoin. You can see very large percentage movements and compound annual growth rates per year of incredible, staggering amounts. But please bear in mind, these really high percentages on the upside also hide a dark secret. You get them on the downside as well. 30-40% declines happen all the time, and that's why it's such a mind game inside crypto. That's exactly why I do the Real Wealth series and help you with the psychological aspects of trading and investing in the world's toughest market. It really is a tough market. It's a tough market emotionally, but when you have that under control, it is the best market in the world. With all of this background information in mind, let's look into the price target analysis of Bitcoin. Bitcoin is currently trading at 64,365. We can see very nice support upwards towards the current price. We've also got a few levels of support confluencing on the current price. We expect Bitcoin to go higher. The next level is 73,638, but we're always aware of the upside and the downside risk. Bitcoin and all cryptos can wobble around quite extensively, so we need to always have probabilistic fearlessness, but an upside and a downside risk strategy in play. The next targeted level of support is 61,897, below that 55,590, and below that 49,305. We also have the Mt. Gox remediation occurring on November the 19th. December the 3rd is the debt ceiling. November the 14th is the Taproot upgrade. There's always things cooking inside the market. It's really important to manage the emotional control that you feel. If you feel that you're wanting a high degree of certainty, you're trapped in zone 1 or zone 2. In zone 3 and zone 4, we just look at probabilities. Zone 1 and zone 2 have what's called the light switch effect. People are typically all in or all out. That's because they want 100% certainty, to be 100% correct 100% of the time with 0% loss. That's fair. If you can get it, why not? The unfortunate thing is financial markets do not permit certainty. Those fantastic returns are directly caused by uncertainty. That's why moving into probabilistic fearlessness, zone 3 and zone 4, is so profitable. We just look at probabilities. If the trend is up, which it is at the moment, negative percentages are simply buying opportunities where we tend to scale in of particular positions to accumulate at a lower average buy-in price. It's all about patience and rules and discipline. Negative awareness is fine, and things don't always go the way we expect. We're fine with that. We're just good losers. Not because we're losers, but because we understand that losses are what the market says are our tuition fee. Every time we take a loss, we learn something new, something more that sets us up for eventual consistent profitability, and many of those losses are emotionally based. So let's dive into the crypto engine and figure out what's going on underneath the hood. We can look at the options, Bitcoin options, expiring at the end of the month, November the 26th. We can see a lot of calls, a lot of people expecting higher prices, all the way up to 120,000. The max pain price, where the majority of options expire worthless, is 60,000. The put call ratio is 0.4. Total open interest, 40,683.7. I always urge you, until you're totally capable, to just avoid derivatives, but there is derivative information that can help us gain spot positions more effectively. If we look at Binance futures, we can see there's a certain amount of negative price pressure on Bitcoin, around the same as with Ethereum. A little bit more. Now, when we look a little bit more deeply, we can see some potential cryptos starting to rocket. For example, Mana, Blaze, IOTEX, CHR, Sand, Storage, HNT, and ICX. Going the other way, some cryptos are also under pressure. ATA, Digibyte, SHIB, NIA, Stellar, and Rune. It's always good to look at the crypto fear and greed index. When the fear is very, very low, prices start to go up. And when the fear is very, very high, prices collapse down. We can see the fear is really not so much in the market. It's wobbled around a little bit, and that was primarily because of Evergrande. But we can see confidence is very high in the market at the moment. Looking at Bitcoin futures open interest across all exchanges, you can see the bar chart of this is all about the total open interest of futures for Bitcoin, and the white line is the price of Bitcoin. You can see the correlation between the two, can't you? As the total futures open interest across all exchanges goes up, the price goes up. When it comes down, the price comes down. When it goes back up, the price goes up. That's why we look at it. It's really important to look at anything that gives us an edge inside the market. We can see right now, total futures open interest is 24.6 billion. Getting the exact figure, because you know me, I love the exact figure, it's 24.96 billion. That's showing a bit of an uptick in open interest, and we would expect that to translate through to an uptick in price. There were 243.64 million in 24-hour liquidations across 84,331 traders. Over the past 12 hours, around 70% of liquidations were long, and we can see the liquidations both long and short playing out on this particular graph. 3 days ago, we had 536 million in liquidation of longs, but you can see it's just wobbling around from short to long liquidations, but not a lot of activity. We can see the price has been steadily going up. Turning to the KS model to understand the overall trend. The KS model is a crypto technical trading model based on institutional price psychology. We're in the bull market psychology segment of the current run. We as a market are expecting higher prices. The absolute minimum high to not violate the previous mathematically protected all-time high is 132,418. This will probably be reached around December, I would imagine. I'm estimating that around December. But the higher target is between 288 and 486,000. The key to understand, Bitcoin's price does not have to solidify at 486. I believe that will be a spike up. We're expecting that peak around the 25th of May 2022, not this year. However, we'll keep our eye on prices. If we get an unsustainable exponential blow off top, we'll just reevaluate then. But things are looking good for it to actually extend in terms of cycle length to around May of next year. The reason we spend so much time on Bitcoin is because of Rule 45. No alt can escape Bitcoin's gravity. Bitcoin is literally like a planet. As Bitcoin goes, so does the crypto market. If it goes up, the crypto market goes up. If it goes down, the same. The crypto market goes down. But Bitcoin is the most stable, if such a term can be used for crypto. With this in mind, we need to know how likely the peak is. Is it just around the corner? There's a number of ways of predicting or at least triangulating where we might be. Bitcoin has mathematically been programmed to create exponential blow-off tops and exponential blow-off bottoms, which are called capitulation. The euphoria that comes with an exponential blow-off top is designed to make basically Bitcoin a little unstable. This is kind of part of the source code. Bitcoin is designed to take on the existing financial system. This inherent volatility is part of the process. When we get an exponential ramping in price to an absolutely unsustainable level, we see this euphoria, these peaks in blue. It's now time to be careful, time to actually start reducing our positions. When we see these exponential blow-off bottoms, which are called capitulation, that's absolutely the best time to possibly buy. And there's always opportunities in between these peaks going either way. You can see in the current price action, we're just in this green area, which is called belief. We're not at euphoria, and the green area can exist, as you can see, back to the past cycle. Back to the past cycle's bull run, because we must compare similar psychological states. We literally must compare sunlight to sunlight, the sunlight of the bull market to sunlight of the past bull market. the nighttime of the bear market to the nighttime of past bear markets, the consolidation, the dawn of consolidation to the dawn of consolidation in previous cycles. If we don't do this, we're violating a law of mathematical consistency. Basically, all price is psychological by nature, driven by crowd psychology. And that's exactly why this euphoria is used. People feel euphoria. When people get euphoric, they don't want to miss out. They've got a fear of missing out, or FOMO, which means the number of new addresses in Bitcoin starts to ramp up exponentially. We're seeing a little bit of ramping now, but it's kind of like this. If we compare those particular peaks, it's kind of around here. There is some way to go. When looking at total transfer volume to exchanges, of course the total transfer volume to exchanges spikes up because people want to lock in higher levels of profitability. But where are we now? We're all the way down here. It's tiny. It's almost at these levels back here in the previous bull run. When looking at the Bitcoin stablecoin supply ratio SSR oscillator, we can see stablecoins have been coming into the market supporting upward price momentum, and we're seeing stablecoins coming into the market being deployed at a decreasing rate just at the moment. To detect if euphoria is happening, going into Google Trends Bitcoin as a search term worldwide over the past 5 years, you can see literally right now we're sitting at 30. 30 was a figure just here in the previous bull run. We've got a long way to go. We're not seeing people get euphoric on crypto, and Bitcoin is the foundation of crypto in so many ways. That's what people search up when they're looking at crypto. Another really interesting website to look at is cbbi.info. They are predicting confidence we are at the peak is 61. Not great. We can see here that they actually go across many different metrics to try and understand where we are in the current cycle, but overall we're not near the peak. The overall trend is Bitcoin is going up. It's about a little over halfway, and we anticipated this many months ago. Let's go Bitcoin. Looking at the major markets is also really important. Looking at the S&P 500 volatility index, the VIX, it's the fear gauge of the stock market. We can see fear has been decreasing. What does this mean? It means that the prices are going up, and we can see prices are going up on the NASDAQ 100. I've changed this around a little bit. I put Bitcoin's fingerprint in the background so you can see it. We can see the put-call ratio is coming up a little bit. It's another kind of contrarian indicator. Like crude oil has been following Bitcoin's price quite well. You can see Bitcoin's fingerprint in there. Also, the bond prices are coming down, which is a really good sign. We want those bond prices to come down. We don't want them to spike. The bond yields are starting to make their way back up. Gold is starting to look good. Good on you, gold. Wow, that's been a long time in the making. And the really interesting thing is gold is going up, and the DXY, the US dollar currency index, is also going up. Hopefully you have a much better understanding of the macro and micro factors influencing the crypto market. We can see that Bitcoin has quite a lot of support playing through here, but even if it was to come down, that's completely healthy. Getting in on Bitcoin at lower prices is a really good idea to do, if we're lucky enough to get them. The thing to remember, price is always moving in a wave. It has a wave up, then a wave down, a wave up, a wave down. It's just part and parcel of financial markets. I hope you found the content useful. Please consider sharing and liking this video if you think it will help others. Thank you very much to our moderators for keeping our community safe from scammers. Please say hi and let me know where you're viewing from and if you have any questions. If you would like daily updates on price movements in the crypto market, please subscribe to YouTube. I've left helpful links in the description of this video. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, take care, and see you next time. Bye for now.